Most exempt organizations must file an annual information return. Think of it as the IRS asking, "Show me what you did and where the money went." The big exam trap is assuming tax-exempt means no filing. Not true. The main exceptions you need to memorize are churches and certain government entities. Everyone else generally files some version of the Form 990 series. Choosing the right 990 is mostly a thresholds game. If gross receipts are normally $50,000 or less, the organization can file Form 990N, the e-postcard. If gross receipts are under $200,000 and end-of-year assets are under $500,000, it can file Form 990EZ. If either receipts hit $200,000 or assets hit $500,000, it's the full Form 990. Now layer in the special cases. Churches and similar religious organizations generally have no annual 990 filing requirement, but that doesn't make them invisible to the IRS. If they have employees, they still file payroll returns. And if they run an unrelated business, they may need Form 990T. Also remember, private foundations are their own world. They file Form 990 picofarads every year. Due dates are another favorite testing point. Form 990 series returns are due the 15th day of the 5th month after the tax year ends. For a calendar year organization, that's May 15th. On the EA exam, they'll often hide the year end in the fact pattern. So, train yourself. Year end plus 4 full months, then the 15th day. Unrelated business income is the surprise filing issue. If an exempt organization has $1,000 or more of gross income from an unrelated trade or business, it generally must file Form 990T. That can apply even if the organization otherwise wouldn't file a 990 like a church. The exam loves that twist. Exempt status doesn't shield unrelated business income. Amending a 990 is simple but easy to miss. There's no separate amended return form. You file the same Form 990 again and check the amended return box. That's it. If you see a question asking which form to use to amend a 990, the answer is the same 990 marked amended. Non-filing has two big consequences: money penalties and loss of exemption. For Form 990, the late filing penalty is $20 per day, capped at 5% of gross receipts for the year unless the organization shows reasonable cause. And the nuclear option, fail to file a required annual return for 3 consecutive years and exemption is automatically revoked. Then they must reapply. Ethan is the sole member of Harbor Bullion, LLC, and he's a professional dealer of collectible coins and precious metals. A customer buys 15 gold coins for $13,200. The customer pays $6,200 in cash, and the rest with a cashier's check for $7,000. What reporting obligation does Ethan have for this transaction? Think about it. The best answer is that Ethan must file Form 8300 within 15 days after the transaction. A trade or business that receives more than $10,000 in cash in one transaction or related transactions has to report it. The tempting wrong answer is just Schedule C, but Form 8300 is a separate cash reporting rule, and certain cashier's checks can count as cash here. What's the deadline to file Form 5500, the annual return and report for an employee benefit plan? The options include different 15th day rules and one option that says the last day of the 7th month after the end of the plan year. Which one is right? Think about it. The correct answer is the last day of the 7th month after the end of the plan year. For a calendar year plan, that's July 31st. A very tempting wrong answer is the 15th day of the 7th month, because that's a common due date pattern in tax, but Form 5500 uses the last day of month rule.